Let me take you back to a balmy evening in a bustling market square. Imagine you're walking through a lively bazaar, the kind where vendors shout out their wares and the air is fragrant with spices. As you wander, you notice a vendor selling beautiful handcrafted lamps. They're exquisite, but you have a choice to make. Do you buy one? If you do, will the lamp fit your living room decor? If you bring it home, will it make every evening in your living room glow as warmly as you hope? This market visit is a lot like the world of investing. Each lamp represents an opportunity, but alongside the potential beauty, there's also risk, just like investing. Risk management is the thoughtful process of deciding which lamps to buy and how much you're willing to spend. It's about understanding both the shine and the shadows that come with every decision. Let's simplify this further. Risk, in the context of money, can be thought of as the chance that the outcome of an investment will differ from the expected result, often meaning you might lose money. But here's an important insight. Risk is not inherently bad. It's a necessary element of investing because without it, there would be no reward. Just like the bazaar, every opportunity in the financial markets comes with a risk attached. Think of risk like the salt in a dish. Too much can ruin the flavor, but none at all makes for a bland experience. The key is balance, enough to enhance the dish, not overwhelm it. In investing, this means finding the right mix of investments that fit your goals and comfort level. Now let's talk about how we can manage these risks. Consider this mental model. Imagine your financial future as a garden. You have a variety of plants. Some are sturdy, like trees, representing stable, low-risk investments. Others are more exotic flowers, offering brilliant blooms but requiring more care and posing higher risk. Effective risk management is about diversifying your garden. So if a storm comes, you don't lose everything at once. Diversification is like planting different types of seeds in different corners of your garden. In the financial world, this means spreading your investments across different asset classes. Stocks, bonds, real estate, perhaps even a small portion in cryptocurrencies if you're feeling adventurous. This way, if one area suffers, others might still flourish, much like how a resilient section of your garden can survive a harsh winter. Let's shift gears and talk a bit about psychology, because managing risk also means managing our emotional responses to money, fear and greed being the most powerful. When prices fall, fear whispers that you should sell everything to avoid further losses. Greed, on the other hand, tempts you to pour more money into a surging market, ignoring the potential for a correction. A key to mastering risk is cultivating emotional discipline. It's like being a poker player who remains calm and calculated, making decisions based on logic and strategy rather than the adrenaline of the moment. One effective way to manage these emotional swings is by setting clear, long-term goals and sticking to a well-crafted plan, no matter how tempting it is to deviate when emotions run high. Real-world examples are powerful teachers. Consider the story of investors during the 2008 financial crisis. Many panicked and sold their holdings at the bottom of the market, crystallizing their losses. But those who managed their risk by remaining diversified and sticking to their long-term investment strategies often saw their portfolios recover, even thrive, as the market rebounded. Now, as we wind down this talk, I want you to reflect on the concept of balance. In life, as in investing, balance is crucial. It's about taking enough risk to grow and achieve your financial dreams, but not so much that you lose sleep at night. It's about being bold enough to seize opportunities while being wise enough to protect what you've built. So next time you're faced with a financial decision, think of the market bazaar and the lamps. Ask yourself, how much does this lamp mean to me? How does it fit into my home, my life? Most importantly, what am I willing to risk for its glow? As you continue your journey in the world of money and investing, remember that mastering risk is not about avoiding it entirely. It's about understanding it, managing it, and using it as a tool to light the path to your financial future.